Welcome back, traders. This is Neil with Option Theory. We're looking at Peleton today. We do a lot of short puts. I think we've been doing a lot of short puts because Tasty Trade sends us those trades and we put them on here. I hope you'll join us for today's look. Peleton has 4 drops of liquidity out of 4. You see those drops over there? Those are the same things as the stars and Tastyworks. Has an IV rank of 29 and an overall IV of 70 right now. It is November 16th, 2021, and if you're interested in today's cherry bomb, we're going to get right to it. Hi everybody, my name is Neil. This is Option Theory. Thank you so much for joining us. On screen you can see that we are doing our trade in simulated trading in paper money or Thinkorswim. Of course you can do these trades for real if you'd like, but we like here to practice our mechanics and so that you can have a partner in learning. So yeah, thanks for joining us. Hope you'll stick around to the end, because I have some modifications to today's cherry bomb trade, which comes from Tasty Trade. Down in the description below, you'll find a link to go sign up and get their emails. We use the cherry bomb ones, gives you 4 trades a week. All right, let's get going now that you know how to join us if you're new. Let's go to the chart and let's pull up Peleton. All right, we can see it fell off a cliff here after earnings and has been drifting lower and lower. And if we do a short put, the cool thing about that is there's 3 ways to be profitable, right? It can go, we can profit if it goes up. That's obviously it's bullish. We can profit if it stays where it is. And we can profit even if it continues to move against us, if it just does so slow enough, right? So that's awesome. Let's go ahead then and go to Analyze, go to Add Simulated Trade. The cherry bomb has us coming in with a weeklies. With 37 days to expiration in the December 23rd weeklies. And it has us short the 40 put, which is an 18 delta, pretty close to the 16 delta sweet spot that Tasty Trade has discovered. The open interest has me a little concerned though, and we're looking at a 7-cent wide bid-ask spread. We're going to, of course, analyze this trade as it was sent to us. So let's go ahead and click the bid here. So we had 7 cents. Let's go up about half that. Let's go to 111 on this one. Penny that up to 111. Oh, hey, that's weird. It was going up and I wasn't even clicking it. All right, so there we go. We have a limit order, 111. Let's go to the risk profile. We know, of course, since we're selling it for 111, that that's the most that we could make. Let's get our date in the top right corner to match the date in blue in the bottom left. That's December 24th. Okay, and let's drag that so the expected move fits nice on the screen. And we're going to get our slices set to break even at December 24th. We're looking at, according to Thinkorswim, a probability of profit or pop of 76% at expiration. A little bit, almost 77, right? Let's pull up the same trade in Tastyworks. And I'm going to pull that up on screen over here. And we can see here that they're saying it's 77% pop with a P50 of 90%. So that's the probability of us collecting half the credit here, and they have the same profit of 111 max profit. Max loss is $3,889 should we collect 111 on that one. So if you're willing to take that amount of risk on a short put on Peleton, maybe thinking, hey, it's not going to continue to go down, or during the cold months coming up here in the northern hemisphere, maybe some people will want to get on a Peleton at home. So there you have it. Let's go back to Thinkorswim. And that's this trade here. We're going to go, of course, and because this is paper money, I'm going to right click this one, choose confirm and send. Click this button so you can see what we're looking at here, right? And we're looking at the same numbers we just saw. I'm going to go ahead and put that in my margin account. What I want to do is now go back to this screen here. And I want to switch over to the IRA account, and I want to pick one that I feel like I would put in my IRA, and I'm actually thinking about doing it. So, and going back to Add Simulated Trade, I feel like we have monthlies tend to be where I like to live. So we can go to 31 days to expiration, or we can go to 66 days to expiration. 45 days being the sweet spot Tasty Trade's identified. You know, I kind of find myself leaning more towards this, but we'll take a quick look at both. Let's look at the December monthlies and see we have a 40 strike as well here, and it's pretty close to that 111, right? But it's only 3 cent wide and way more open interest. So if I click this one and I penny that up to 94, maybe 95, but let's go with 94. And let's go to risk profile for this one. Set the date to the 18th. and the price slices to break even at expiration, we're looking at a 78% probability of profit according to Thinkorswim. And if I clear this out in Tastyworks, let me switch over so you can see that. And we're going to click on there. And same idea, 95 they have us at. They're giving us a pop of 78 and a P50 of 87%. I like this one a little better. That's closer, slightly closer to that delta that we're looking at. Way more open interest. I like that, being able to get in and get out. The other trade, we're just going to look at this one in Tastyworks. The other trade being the 66 days to expiration. And you can see the skew here. Is it quite interesting, actually? Because back over here, look at the skew here. Up, it's much further to the call side. That's weird that it's different on this one. Who knows? But we're looking here at what I think 37 is the 16 delta. Plenty of open interest. More credit received on this one. It's still a little wide with 7 cents. But here we're looking at a pop of 78 and a P50 of 90. So similar probability, lower risk on this one because we're going down to the 37 strike. So I like both. I feel like what I'm more interested in doing is taking the 31 days to expiration. So let's go back over here, and we're in the 31 days to expiration, the 40. And I'm going to leave that set to 94, right click it, choose confirm and send. And I just realized you can't see it. So here it is. This is what we're looking at here, the 40 put. It's 17 delta, 6,000 open interest. And I've got the confirm and send screen pulled up. Here it is. We got 94 cents of max profit, $3,900 of max loss possible. And we'll have a pretty easy to manage put if this thing goes our way. So let's go ahead and hit send. We've got two different puts. Compare the performance of the two so we can understand, hey, which ones we like doing. You made it to the end of the video. Big thumbs up to you. And I do appreciate it. So if you think that I earned it, there is a like button down below. Feel free to hit that. And if you want to come back and join us at least 4 days a week, please hit that subscribe button. Until then, may the market be with you.